Fiduciary funds are established to account for resources that the government has a fiduciary or custodial duty to administer or oversee. In essence, they're holding and managing property for an external party, an individual, an organization, or even another government. It's important to point out that these fiduciary funds, the beneficiaries of them, the resources are not being used to support, are not the government's own programs or the government's own general public. These fiduciary funds are being established for resources that benefit a specific individual, a specific group or organization, or another government. If a fund does benefit the government or the general public, we talked about those kind of funds earlier in the governmental funds category, and we called those permanent funds. So make sure that when you're looking at some type of trust fund or fund that is benefiting people, you need to think specifically, make a decision. Is it benefiting the government's own programs or services or the general public at large? Then it's going to be governmental fund, where if it's an intended party, a specific individual, only a specific group of people, or another government, then it's going to be one of these fiduciary fund types. Custodial funds, the first one listed, is our basic, where we have oversights of assets for external parties. And then the other three, notice they all contain the word trust. So typically for these bottom three, there may be a trust agreement document in place. But these other three could also be just devised based on a pension plan or some other post-employment benefit that has been defined. Pension and other employee benefit trust funds are when we have assets held in trust to provide retirement benefits. Investment trust funds are used to account and report for external participants, typically other governments, in our current government's investment pool. And then the private purpose trust funds are created to manage trust funds where private individuals, organizations, or other governments are the beneficiary. Keep in mind that with these fiduciary funds, when we put their fund financial statements together, that they are not included in the government-wide. These fiduciary funds do not represent funds of our government. These are just us doing our fiduciary duty on behalf of others. These are not included in the government-wide. Accounting for some of these can be quite cumbersome and complicated. I think, for example, this pension trust funds, what if we're talking about the state? How many employees have they had over time? Can you imagine the record keeping required in order to maintain a pension trust fund for a state? We will see these later in the chapter. With our fiduciary funds, again, they're only reported within the fiduciary fund financial statements, not within the government-wide. And we have said that we will have two financial statements for our fiduciary funds. We will have that item that's kind of like the balance sheet, that statement of fiduciary net position. And then we will also have a statement of changes in fiduciary net position. So that shows us the operating results for the year. Basically, the formula looks a little bit like your typical operating statement. You would be taking a look at what additions came in and what deductions went out, and that net result would be applied to the prior year's final net position number, and then you could see what your new net position is.